Based on the historical data and forecast, Bitcoin shows a mixed trend with periods of volatility. The RSI consistently remains below 50, indicating that the asset is currently in an oversold condition, particularly with a reading of 30.8 on November 25. The Bollinger Bands show that the price has recently touched the lower band, suggesting a potential bounce. Considering these factors, I recommend a long position with an entry price of $89,500. A stop loss should be placed just below the support level at $88,700 to protect against further downside risk. The initial target price should be set at the resistance level of $91,300, aiming to capture a short-term upward move. For the upcoming week, the forecast indicates price fluctuations around $89,500 to $90,900. Given the oversold RSI and the proximity to the lower Bollinger Band, I suggest a slightly more aggressive strategy. If the price dips to $89,500 on December 9, 2025, enter a long position with a stop loss at $88,800. The first target should be $90,600, and if that is reached, move the stop loss to break even to protect profits and allow for further upside. A second target could be $91,300, aligning with the established resistance level. This approach combines RSI and Bollinger Band signals to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum exhibits a generally upward trend, with recent volatility. The RSI fluctuates between 32.9 and 52.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has been oscillating within a range, with the lower band around $2,600 to $2,730 and the upper band around $3,240 to $3,670. Considering these factors, I recommend a strategy that combines RSI and Bollinger Band signals to capitalize on short-term price movements. My proposed strategy involves a combination of RSI and Bollinger Bands. First, we will look for opportunities when the price touches the lower Bollinger Band and the RSI is below 30. This indicates a potential oversold condition. For example, on December 1, 2025, the price was $2,790, the RSI was 32.9, and the bottom of the Bollinger Bands was $2,670. In this case, we would enter a long position at $2,790, with a stop loss at $2,750 and a target price of $3,050. Alternatively, when the price touches the upper Bollinger Band and the RSI is above 70, we will look for a short opportunity. For example, on November 29, 2025, the price was $3,190, the RSI was 52.1, and the top of the Bollinger Bands was $3,240. In this case, we would enter a short position at $3,190, with a stop loss at $3,230 and a target price of $2,990. These strategies should be adjusted based on real-time market conditions and risk tolerance. Based on the historical data and forecast, XRP has been exhibiting a generally downward trend, fluctuating between a support of $2.03 and a resistance of $2.2. The RSI readings have mostly been below 50, with several dips below 40, indicating periods of oversold conditions. The Bollinger Bands have been contracting, suggesting decreasing volatility. Considering these factors, I recommend a cautious, short-term strategy focused on capitalizing on minor upward bounces while remaining prepared for potential further declines. My proposed strategy involves a tiered approach combining RSI and Bollinger Band signals. Firstly, initiate a long position at $2.08 when the price touches the forecast support level and the RSI is below 40. Set a stop loss at $2.03, just below the established support, to limit potential losses. The initial target price is $2.15, aiming for a quick profit as the price tests the resistance level. If the price reaches $2.15, consider moving the stop loss to break even to protect gains. If the price continues to rise and touches the upper Bollinger Band, set a second target price at $2.2, taking profits at the resistance level. This strategy balances risk and reward, capitalizing on short-term momentum while safeguarding against significant downside risk. Based on the historical data and forecast, BNB exhibits a slight upward trend. The RSI consistently fluctuating around the 40 mark suggests we are not in an extreme oversold or overbought territory. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the lower band. Considering the RSI and Bollinger Bands, I recommend a combined strategy. We will initiate a long position when the price touches the lower Bollinger Band and the RSI is below 30. The entry price for this trade will be $883. To manage risk, set a stop-loss order at $823, just below the lower Bollinger Band. The target price will be $897, aligning with the forecast price for December 9, 2025, and allowing for a reasonable profit margin. To further refine the strategy, we will implement a secondary entry point. If the price bounces off the support level of $895 and the RSI is between 30 and 40, enter a long position at $895. Place a stop-loss order at $885, just below the support level. The target price for this trade will be $922, the highest price reached during the historical period. This combined approach leverages both technical indicators and support levels to maximize potential returns while minimizing risk. The portfolio will be 60% for the first strategy and 40% for the second strategy. Based on the historical data and forecast, Solana has been experiencing a downtrend with significant volatility. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The price has repeatedly tested the support level of $131, and the forecast suggests further decline. The Bollinger Bands show widening bands, reflecting increased volatility and potential for price swings. Considering these factors, I recommend a short selling strategy with an entry price of $131. A stop loss should be set at $133 to mitigate potential losses if the price unexpectedly rebounds. A reasonable target price for this short position would be $127, aligning with the forecast and the lower Bollinger Band. To refine this strategy, we can incorporate RSI signals. When the RSI dips below 30, indicating an oversold condition, we can consider entering a short position. Conversely, when the RSI exceeds 70, signaling an overbought scenario, we can consider exiting the short position or covering our shorts. The Bollinger Bands can be used to confirm these RSI signals. If the price touches the lower band while the RSI is oversold, it strengthens the case for a short position. If the price approaches the upper band while the RSI is overbought, it suggests a potential reversal. Combining these indicators, a short position at $131 with a stop-loss at $133 and a target of $127 offers a balance between risk and reward in this volatile market. Based on the historical data and forecast, TRON has been fluctuating within a range between $0.274 and $0.297. The RSI indicates that the asset has been in an oversold condition recently, with values below 40. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. Considering these factors, I recommend a long position with an entry price of $0.274. A stop-loss order should be placed just below the support level at $0.271 to limit potential losses. The initial target price should be set at the center of the Bollinger Bands, which is around $0.283, providing a modest profit. To maximize potential returns, I suggest a trailing stop-loss strategy. Once the price reaches $0.283, move the stop-loss to $0.278. If the price continues to rise, the next target price should be the resistance level at $0.297. However, given the forecast data indicating a downward trend in the coming week, I advise taking partial profits at $0.287 and moving the stop-loss to the entry price of $0.274. This approach balances the potential for further gains with the risk of a price reversal, ensuring a profitable outcome regardless of the market's direction. Based on the historical data and forecast, Dogecoin shows a downtrend with consistent support at $0.139. The RSI consistently fluctuates between 32.1 and 46.1, indicating periods of oversold and overbought conditions but not strongly trending. The Bollinger Bands show a contraction, suggesting decreasing volatility and a potential for a breakout. Given the downtrend and the forecast predicting further decline, I recommend a short selling strategy. We will initiate a short position when the RSI reaches above 60, indicating an overbought condition. The entry price for the short position will be $0.142. The stop loss will be set slightly above the upper Bollinger Band at $0.158 to protect against a potential false breakout. The target price will be $0.135, aligning with the forecast and providing a reasonable profit margin. This strategy combines the trend analysis, RSI signals, and Bollinger Bands to manage risk and maximize potential returns. The portfolio will prioritize this short selling strategy due to the overall bearish outlook and the potential for a profitable decline. Based on the historical data and forecast, Cardano shows a downtrend with increasing volatility. The RSI consistently remains below 50, indicating a prevailing bearish momentum. The forecast data suggests a continued decline, with prices potentially reaching $0.398. Considering the current RSI of 30.0, which is in the oversold territory, I recommend a contrarian strategy aiming to capitalize on short-term bounces. I will initiate a short position at $0.414 with a stop loss placed slightly above the upper Bollinger Band at $0.458 to protect against unexpected upward movements. The initial target price will be $0.398, aligning with the forecast data and the support level of $0.414. To refine the strategy, I will incorporate the Bollinger Bands. If the price touches the lower band of $0.354, I will consider covering the short position, securing a profit. Conversely, if the price breaks above the upper Bollinger Band, indicating a potential trend reversal, I will immediately exit the short position at the stop-loss level of $0.458. This dynamic approach allows for adapting to changing market conditions while capitalizing on the anticipated downtrend. This portfolio prioritizes risk management and aims for a balance between potential gains and downside protection. Based on the historical data and forecast, Bitcoin Cash demonstrates a clear upward trend, consistently testing and breaching the resistance level of $598. The RSI fluctuates between 49.9 and 61.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands show the price frequently touching the upper band, suggesting bullish momentum. Therefore, I recommend a long position strategy. We will enter a long position when the RSI drops below 50 and the price touches the lower Bollinger Band. Specifically, we will enter a long position at $578. To manage risk, we will set a stop loss at $560, which is the support price. Our target price will be $606, aligning with the forecast price and the upper Bollinger Band. To optimize returns, we will implement a dynamic strategy. If the price reaches $606, we will take partial profits and move the stop loss to the entry price of $578. This secures gains while allowing the position to continue benefiting from potential further upward movement. If the RSI reaches 80, we will consider taking full profits and exiting the position. This prevents losses from a potential reversal. This strategy combines technical indicators and forecast data to maximize potential returns while effectively managing risk. The projected profit is 606 plus 28 is equal to $634. Based on the historical data and forecast, Wrapped Beacon ETH has shown volatility with periods of both upward and downward trends. The RSI readings fluctuate between oversold, below 30, and overbought, above 50, levels, suggesting potential for price reversals. The Bollinger Bands indicate periods of increased volatility and potential breakouts. Considering these factors, I recommend a combined strategy utilizing RSI and Bollinger Bands to maximize returns. Initially, I would enter a long position at $3,300, coinciding with the first day of the forecast period. A stop loss would be placed at $3,200 to mitigate potential losses if the price declines. The initial target price would be $3,400, aligning with the upper Bollinger Band and a reasonable profit target. As the forecast progresses, I would adjust the position based on the RSI and Bollinger Bands. If the RSI reaches 80, indicating an overbought condition, I would take profit at $3,400. Conversely, if the RSI falls below 20, indicating an oversold condition, I would consider adding to the position or initiating a new long position at $3,340. A stop loss would be adjusted to the lower Bollinger Band, around $3,200, to protect profits. The ultimate target price would be $3,400, based on the forecast and resistance levels. This combined approach aims to capitalize on both momentum and volatility, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Dogwifhat shows a volatile trend with periods of both upward and downward movement. The support price consistently remains at $0.368, while the resistance fluctuates around $0.4. The RSI indicator has generally been below 50, indicating a slightly bearish sentiment, but has recently approached the 50 level. The Bollinger Band suggests that the price is currently near the lower band, indicating a potential oversold condition. Considering these factors, I propose a strategy that combines RSI and Bollinger Bands to capitalize on potential bouncebacks. The strategy involves entering a long position when the RSI falls below 30 and the price touches the lower Bollinger Band. Based on the recent data, the RSI was 37.1 on December 2, 2025, and the price touched the lower Bollinger Band of $0.316 on December 2, 2025. Therefore, I recommend entering a long position at $0.316. The stop loss should be set slightly below the support level at $0.36 to limit potential losses. The initial target price is set at the resistance level of $0.4. If the price reaches $0.4, we can consider moving the stop loss to break even and setting a secondary target price at $0.43, based on the upper Bollinger Band. This strategy aims to capture short-term gains from the anticipated bounce back while managing risk effectively. Based on the historical data and forecast, Bittensor exhibits a downtrend with considerable volatility. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The forecast for the next week predicts a continued decline, with prices fluctuating between $267 and $278. Given the support price of $276 and the RSI hovering around 40, a strategy focusing on short positions is warranted. We will implement a short position when the price reaches $278. The stop loss will be set at $283 to protect against unexpected upward movements, and the target price will be $267, aiming to capitalize on the anticipated downward trend. To enhance the strategy, we'll incorporate Bollinger Bands. When the price approaches the upper band, it signals a potential pullback. Therefore, if the price reaches $278 and the upper Bollinger Band is at $338, we will initiate the short position. The stop loss will be set at $283, just above the recent high, and the target price will be $267, aligning with the forecast and the lower Bollinger Band. This combined RSI and Bollinger Band strategy offers a balanced approach, mitigating risks while maximizing potential returns in a declining market. Based on the historical data and forecast, Ondo exhibits a downtrend with significant volatility. The price has been fluctuating within a range between $0.456 and $0.513, with recent trading below the center of the Bollinger Bands. The RSI consistently remains below 50, indicating weakening momentum. Given the forecast for continued decline, I recommend a short selling strategy. Enter a short position at $0.484, placing a stop-loss order at $0.513, just above the resistance level. The initial target price is $0.444, aligning with the forecast and the lower Bollinger Band. To refine the strategy, we will incorporate RSI signals. When the RSI falls below 20, it indicates an oversold condition, suggesting a potential bounce. Conversely, an RSI above 80 signals overbought conditions, hinting at a possible reversal. Given the current RSI around 35.7, we are not yet in an oversold territory. However, if the price dips further and the RSI reaches 20, consider covering the short position and potentially initiating a long position with an entry price of $0.44, a stop loss at $0.456, and a target price of $0.467. This dynamic approach allows us to capitalize on both downward and upward price movements, maximizing potential returns. Based on the historical data and forecast, Celestia exhibits a downtrend, particularly noticeable in the recent forecast prices consistently below $0.555. The RSI consistently hovers around 30 to 40, indicating a slightly oversold condition, but not strongly so. The Bollinger Bands show that the price is approaching the lower band, suggesting potential for a bounce. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. My strategy involves a long position at $0.523, capitalizing on a potential bounce from the lower Bollinger Band and the oversold RSI. The stop loss should be set at $0.509, just below the forecast low for December 15, 2025, to limit potential losses. The target price will be $0.557, aligning with the support price and offering a reasonable profit margin. This strategy aims for a quick profit by anticipating a temporary price reversal before the overall downtrend resumes. This is a high-risk, high-reward strategy suitable for experienced traders. Based on the historical data and forecast, Ether.fi has shown volatility, fluctuating between a support price of $0.744 and a resistance of $1.02. The RSI indicates that the asset is currently neither excessively overbought nor oversold, hovering around the 40s. The Bollinger Bands have been narrowing, suggesting a period of consolidation, but with a forecast showing a slight downward trend in the short term. Given this analysis, I propose a cautious strategy focusing on short-term price movements. We will implement a combination of RSI and Bollinger Band strategies. Our strategy involves a long position entry at $0.793, capitalizing on a potential bounce from the lower Bollinger Band and a slight upward correction. A stop loss will be placed just below the support level at $0.73 to protect against a significant downturn. The initial target price will be set at $0.83, aligning with the upper Bollinger Band and a reasonable profit margin. If the price reaches $0.83, we will reevaluate the situation. If the upward momentum continues, we will adjust the target price to $0.85. This combined strategy aims to leverage short-term volatility while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, Pepe has been trading within a range between $0.000000440 and $0.0000480, indicating a sideways trend. The RSI fluctuates between 29.5 and 47.8, suggesting periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing, indicating decreasing volatility. The forecast price suggests a continued sideways movement, with prices hovering around $0.0000440 to $0.0000460. Given this scenario, a combined strategy incorporating RSI and Bollinger Bands is recommended. We will implement a combined strategy with three components. First, utilize the RSI for short-term trades. When the RSI dips below 30, indicating an oversold condition, enter a long position at $0.0000440. Set a stop loss at $0.0000430 and a target price at $0.0000470. Second, leverage the Bollinger Bands for trend confirmation. If the price touches the lower band, around $4.06, it signals a potential rebound. Enter a long position at $4.06, set a stop loss at $0.0000390, and target $0.0000460. Third, when the RSI reaches 80, indicating an overbought condition, enter a short position at $0.0000480, set a stop loss at $0.0000490, and target $0.0000450. This combined approach aims to capitalize on short-term fluctuations while mitigating risk through strategic stop-loss placements. Based on the historical data and forecast, FLOKI has been trading within a range between 0.0000450 and $0.0000499. The RSI has fluctuated between 29.8 and 46.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been contracting, suggesting a period of consolidation. The forecast for the next week shows a slight downward trend, with prices hovering around 0.0000460 to $0.0000455. Considering these factors, I recommend a long position strategy when the RSI dips below 30, aiming to capitalize on potential rebounds. Specifically, I suggest entering a long position at $0.0000450 when the RSI falls below 30. Place a stop-loss order at $0.0000430 to limit potential losses. Set a target price at $0.0000499, the resistance level, to secure profits. This strategy combines trend analysis, RSI signals, and support/resistance levels to maximize potential returns while minimizing risk. The portfolio will be 60% long position, 30% RSI strategy, and 10% Bollinger Band strategy. Based on the historical data and forecast, Worldcoin exhibits a downtrend with increased volatility. The RSI consistently fluctuates around the 35 to 45 range, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a continued downward trajectory, with prices potentially reaching $0.551. Considering the support level at $0.566 and the Bollinger Bands, I recommend a contrarian strategy focusing on short-term pullbacks. Specifically, when the price touches the lower Bollinger Band, around $0.559, enter a long position. Place a stop-loss order slightly below the support level at $0.55 to mitigate potential losses. The target price for this trade should be set near the middle of the Bollinger Bands, around $0.624, aiming to capitalize on a short-term bounce. This strategy combines technical indicators and trend analysis to maximize potential returns while managing risk. The RSI suggests the asset is not severely oversold, so a conservative approach is warranted. This portfolio is designed for a short-term holding period, adjusting the position based on subsequent price action and indicator signals. This strategy prioritizes a balance between potential gains and risk mitigation, aligning with a disciplined investment approach. Based on the historical data and forecast, Dash shows a clear downtrend, consistently trading below the center of the Bollinger Bands and with RSI values mostly below 50, indicating a bearish momentum. The support price is consistently at $44.6, while the resistance is at $63.6. Given this information, I recommend a short position strategy. The entry price should be $49.8, coinciding with the first day of the forecast. Place a stop-loss order at $52.4, just above the forecast high for the week, to limit potential losses if the price unexpectedly reverses. Set a target price at $44.6, aligning with the established support level, to capitalize on the anticipated downward trend. To refine this strategy, I'll incorporate RSI and Bollinger Band signals. Since the RSI is consistently below 50, the asset is generally oversold, suggesting a potential bounce. However, the downtrend and forecast price movements suggest that this bounce will be temporary. Therefore, the short position remains the most efficient strategy. The portfolio will consist of 100% short positions in Dash, with the entry price at $49.8, a stop-loss at $52.4, and a target price at $44.6. This approach balances risk management with the potential for high returns in a declining market. Based on the historical data and forecast, Zcash has shown significant volatility, with a clear downtrend from November 25 to December 8. The support price remains consistently at $339, while the resistance is at $568. The RSI indicates oversold conditions for much of the period, fluctuating between 34.1 and 46.6. The Bollinger Bands show increasing volatility, with the lower band consistently dropping, indicating a potential for further decline. Given this analysis, I recommend a contrarian strategy focusing on short positions when the RSI reaches above 60, and long positions when the RSI reaches below 30. Specifically, let's implement a combined strategy. For the forecast period, starting December 9, 2025, with the forecast price at $368 and the RSI at 40.6, we will initiate a short position at $370. The stop loss will be set at $395, just above the upper Bollinger Band. Our target price will be $340, near the support level. If the RSI dips below 30 during the forecast period, we will initiate a long position at $368. The stop loss will be $340, below the support level, and the target price will be $395, near the upper Bollinger Band. This combined approach leverages both RSI and Bollinger Bands to maximize potential returns while mitigating risk.